people's savings exploded higher to an absolute record 33%. Unbelievable how much cash people had in their bank. And this is what led to inflation. Well, guys, credit card use keeps going up as people keep on fighting inflation, higher interest rates, savings are going down. That is the news on the street, and it is a forward-looking indicator where we're heading, and it's not looking good. Hey guys, my name is David Ruff, and thank you very much for tuning in. Today, we're going to be taking a look at the problems that we're facing as an economy. If we check in this is the U.S. credit card debt jumps 18.5% and hits a record now. It's just about to cross $1 trillion, and they already have, this is a record. Now, total credit card debt reached $930 billion in the fourth quarter, according to TransUnion. And as the balances rise, so have their delinquencies. So people are defaulting on their payments. And he says, this is something to watch, quote unquote. Of course, you got to watch that. And inflation and interest rates are killing people right now. Now, for you guys, I just got a credit card in the mail. I don't know if you're seeing this. I got one at 29.9%. 29.9. Have you guys seen that? That's unbelievable. 30%. How are people supposed to afford that? Let's see, how bad was credit cards before? Now let's go back to November. That's not that long ago. And they were saying in November, credit card and personal loan balances reach record levels back because of high inflation and rising rates. So this was a Q3 report. Consumers turning to unsecured personal loans and credit cards as a way to fight off the pressures from inflation. But if we saw that they had a record high of 866 billion, 866, which was a 19% increase year over year. 866. Let's go back. What are we now? At 930 billion with a B. So now it has to be way over 19%. Here comes the 1-2 punch. This graph from the Fed economic data, this is from the St. Louis Fed. This just shows you what percentage of income people have in their banks. You can go down to the bottom. It'll say personal savings as a percentage of disposable personal income, DPI. So how much money do you have in your bank? As you can see, people normally have a little bit of a reserve, like 10% of their incomes. Now, obviously, when recessions happen, they behave differently in different times. There's ups and downs. So maybe in a recession, here it is in the 70s, people weren't going to work, weren't spending as much. But as you can see, it generally was sitting around 10%. 1971 went off the gold standard, remember. We had some rough 80s, which really kind of started drawing it down. And then it really started going down when we started doing all of our money printing in the 90s. We could see it dropping from the 10s down to the 5s. And if we look right here in 2005, so this is leading up to the 2007, 8, 9 crisis that we had, it hit 2.1. This was a big measure in July 2005 as everybody was pulling out every dollar that they could to sink it into real estate with those ninja loans. And then, yeah, we went through this bad time, as everyone knows, the great financial crisis. Now, heading into 2020, look at what happened to people's savings as we were sending checks out to everybody. Personal savings exploded higher to an absolute record 33%. Unbelievable how much cash people had in their bank. And this is what led to inflation. Remember, it all depends who you give the money to. This is what I want you to remember. In some of the last recessions, they would take money, take credit, and give it to company owners to build businesses. But if you give money to somebody who already is very wealthy, they take the money, they go open another business with it. They take the money, they buy stocks with it. During 2020, 2021, it was some high number, if memory serves me right, around 96% of every single dollar printed ended up in the stock market. And people were just like playing it like the lottery, putting it there, putting it there. But if you send checks to individual people who have a low standard of living, let's say that they weren't wealthy, they're going to take that money and go buy new TVs, new pillows, new tires, new whatever they need. They're going to buy stuff with it. So the behavior is very different depending on who you give the money to. When you get the money and you give it to wealthier people, you'll have asset inflation, homes, stocks. But when you give it to everybody, now the cost of everything goes up. Very, very different, right? Because say a guy is worth like millions of dollars. He is still only sleeping on one pillow or maybe 2 like me. Okay. But you know what I mean? So this has a lot to do with it. Now look at this savings rate today. As inflation has been biting through 2020, 2021, look at that savings rate sinking, 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 sinking. Where are we right now? I think we're just around 3, just about 3, but I think it's going to be lower when the January numbers come out. But if we look back over time, we have not had savings rates this low since 2005. And this is the danger. So for you to think back, when we think of 2008-9, which is the most recent recession, it has nothing to do with how it is today. In 2008-9, we had ninja loans, no income, no jobs, and we still gave you mortgages. Okay. That was a big, big problem. So our underwriting was terrible, and there was a surplus of homes. There was homes everywhere. Now we're at massive shortages. Canada down 1 million homes. We need 1 million more just to balance the market. In the US, 5-6 million homes they need just for the people who are alive here, not even counting the immigration. But then on top of all of that, the shortage of homes, now they're not lending to very many people, and we have a huge national debt problem. This stuff wasn't around. So the flavor of trouble that we're coming into is very, 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 very different. We have to look at things in a different light. So we're seeing credit card usage skyrocket. We are seeing interest rates skyrocket. We're seeing inflation skyrocket, and there's no savings in the banks anymore to withstand that pressure. So something has to break, but it's not yet. As we saw the jobs report that came in, 500,000 jobs. How did thousands of economists get that all wrong? Still makes me laugh. But we're going to have to learn the tools that we can. If you want, just go back and read what happened between 1945 and 1950, because there is going to be a lot of things that are going to be very, very similar to what we're living in today. Anyway, guys, if this gives you any help whatsoever, please consider sending it to a friend, and hopefully you'll subscribe, and we'll talk to you in the next video.